Welcome to Theo Trade. This is Don Kaufman. Here we are. It's April 10th, 2017. The S&P futures today closed massively unchanged. But to me, that's not really the story. As a trader, I just have to step back from the screens. And, I've been talking about this day in and day out, and it continues to grow larger and larger on a day-to-day basis. And what am I referencing? Has anybody not looked at the volatility futures? The volatility futures today are going to close, and these are the shorter duration volatility futures, which I'll explain momentarily. These things are going to close up almost 6.5%. You just have to ask, this is a trading day today where not much happened. Look, the S&Ps are massively unchanged. The NASDAQ futures are unchanged. The Dow futures are roughly unchanged, and the Russell did much of nothing. Why is risk growing, perpetuating? It's building. We got a situation that is coming to a head here. And people are coming up with reasons. I know a lot of traders are starting to see it now, but they're coming up with like all kinds of crazy reasons. It's the French election. It's this, it's that. First of all, the French election, is likely to have a runoff, multiple times out there. But hey, listen, the French election is not, this is a 9-day volatility future. And we're actually totally inverted right now. And what that basically means is if you look on the screen, there's the 9-day volatility future. That means risk in the next 9 days is now above risk 37 days out, substantially above. It means risk is here, risk is imminent, risk is prevalent. This means get under the desk, duck, cover, put the helmet on. How many other analogies can I possibly give you for it? Okay, so the one thing I always look for, I see the volatility futures elevated, and again, they've inverted. I always look further out in time, all right? And I don't want to beat this one to death over here because I have been beating it to death day in and day out. The 37-day volatility futures are trading for 1427, but then even look further out in time, okay? The 37-day risk is starting to come a lot closer to the 72-day risk, which is pretty insane, right? Is 1 month of risk more than 2 months of risk? And for those of you a little, uninitiated on this, all the market's saying right now is risk literally right here, like today, is bigger than risk is going to be a couple of weeks from now. Now think about, again, how odd that sounds, because what does that mean? All right. It means we're in risk right now, and that risk is actually going to abate in the future, which sounds totally backwards because you haven't even seen the S&Ps do anything. Let's go to the SPX. Go to a chart on the SPX over here, and what have you done for me lately? Absolutely nothing. Now, one of the most unusual things is if you take a look at the SPX, it's done literally nothing the last couple of days over here, yet risk obviously continues to grow. The only thing I can equate this to is if you looked like right before the election. Right before the election, we had a similar, bid in terms of volatility. This is right before the election, okay? And volatility was really getting crazy when the S&Ps were kind of selling off here. This is prior to the election. But the market was actually selling off and volatility was increasing. Right now, we just have volatility increasing, okay? Now, is there any other evidence? So, I never look at a screen and go, oh yeah, look, the volatility futures, they're kind of crazy to look at on a chart because, first of all, you have to contract adjust them, hit apply, hit okay. And you'll see the volatility futures getting a big bump up. Now, is there anything else on the screen to confirm what we're seeing in these volatility futures? And the answer is, well, yes, there actually is today. And this is the first real confirmation. The VVIX. What is the VVIX? The volatility of the volatility index. Now, the VVIX, I'm going to zoom in. This is back before the election. Now, remember, before the election, as I showed you, the markets were actually selling off and the volatility was growing into the market ultimately selling off. Right after the election, boom, the volatility comes right back down. Here, we're seeing an explosion in volatility. Why is this interesting to me? Okay, if you look where the VVIX closed today, and go to a 1-minute chart, it closes the absolute high today. Okay, if you look where the VVIX closed today, which is the absolute high, The risk right here today is actually greater than it was when we saw that last sell-off in the S&Ps. Okay, the last sell-off we saw in the S&Ps was on March 21st. On March 21st, the VVIX only spiked up to 84. Newsflash, it's all the way up at 97. Getting above 100, we're getting dicey. Now, again, that's two major volatility indications that say, risk is here, risk is imminent. In addition to it, once again, this is where I come back to the S&Ps. The S&Ps are coiling right in and around 2349. I've been mentioning 2349 now for weeks ad nauseum. You've heard me mention 2349. Okay, it is now, again, this is purely the opinion. When I say we're coiling around it, we're literally wrapped so tightly around this. We are ready now, it appears, by indication of volatility, to rip through 2349. Okay, like it's going to be bread. It's going to be nothing. We're coiled through it. Now, you would expect, the first move to, of course, be down. Not entirely sure. Volatility is elevated at this point. I've seen this movie before, and I've actually seen this get bid higher and then get crushed down. Overall, obviously, I believe that markets are about to make and are on the verge of a much larger down move out here. By the way, if you need some evidence for the down move, and again, that's totally like opinion based. All I'm trying to do is show you, like, volatility, it doesn't get much more heated than this. Even in the after hour, look at this. It's even cresting. They're buying it right now, into the after hour. We just closed at the absolute high. Somebody sees something like going on literally right here today. If you need, more evidence of like, all right, I think the markets are finally ready to roll over and die, you have to look at the news that came out on Tesla today. Tesla's market cap is now bigger than Ford, and it's bigger than General Motors. So ladies and gentlemen, congratulations, Tesla is now officially the largest car manufacturer in the United States. Oh, you have to love that. How many cars did they turn out last year? Okay. You have to realize, GM and Ford, they turn out as many cars as Tesla in a year. Tesla turns out as many cars as GM and Ford do in 1 month individually. It's insane. Okay. So if you're looking for are there signs of a top? I'll take Tesla. I'll take Tesla, please, as a possible sign of a top. You've also got Amazon, which is, again, is it one last hurrah over here? Amazon actually appeared late last week, like I was seeing some sell-side activity. It's getting bid back to the upside. Moreover, again, I always like to look for trade ideas, where does this translate to trade ideas? And to me, again, undoubtedly, the financials, well, they're already under pressure. Once again, it's the NASDAQ. If there's a product that you want to be short in this marketplace, it's going to be the NASDAQ. Okay, the NASDAQ, forget about NASDAQ futures. If you're not comfortable with futures, don't use the NASDAQ futures. Go use the Qs. It's a softer, gentler, kinder place. This product is just off of its all-time high. Nothing wrong with shorting a NASDAQ in a marketplace, again, that's displaying extreme amounts of risk. Keep your eyes on this volatility indication. Now, many of you don't have time to sit there all day and watch it. Nevertheless, if you see something like flashing red lights at you, you'll start to pay attention. And the volatility indications right now are all lit up. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.